Morning, Steve here in Chicago with the morning grain comments. I have a mixed trade with beans and meal up, corn about unchanged, wheat a little higher, and oil a little bit lower. We're noticing that palm oil futures are a little bit lower and off the contract highs based on the fact that there is some concern about demand at these higher price levels and also supply. This is the time of year seasonally when palm oil production tends to increase. As far as the beans and corn market is concerned, I think we're getting ready for the March 31 report. We've seen since February a big steep drop in open interest in the grains, suggesting less participation in the marketplace, whether it's because of better South American weather or the seasonal switch from U.S. corn and soybean and meal export demand to South America, or just some uncertainty of demand in Europe or uncertainty of demand in China. Certainly the Chinese have come in and bought a large quantity of U.S. corn, and they're expected to buy more, but they may be done buying U.S. soybeans for now. As far as South America is concerned, it's going to continue to be mostly dry in Brazil, which could help bean harvest, but hurt the second and larger corn crop. Argentina rains have stopped the stress of the crops, but most people that feel the corn and soybean crop is lower than what the USDA has suggested. Here in the United States, we've seen some good rains across the southern plains and parts of the Midwest. Northern plains remains dry, but the rains in the Midwest and plains is helping crops there and soil reserves there. It is interesting, a couple of days ago, the American model decided to change its methodology. They thought that this winter they were too cold for the actual temperatures. And so we hope that the American model, which comes out 6 times a day, and the European model, which comes out 2 times a day, will begin to get closer as far as differences in long-range forecasting. It is interesting that a day ago, the new American model showed a very big cold front dipping down into the eastern part of the hard red winter wheat and soft red winter wheat areas. Today it's not quite as cold. So that might have bumped wheat prices up unexpectedly, but again, the concern about wheat is that northern hemisphere crops, if they're okay, prices might continue to drift lower. In the wheat, we're also going to be watching Russian export policy. Right now they have no export prices for new crop, and we're just kind of waiting to see what happens there. U.S. is not competitive right now in the world, but without the Russian exports, we could actually see some demand, which would tighten things up. USDA report, everyone's looking for some bullish numbers, lower stocks for corn and beans than the average trade gets, and the possibility of we have to have record or at least higher acres in corn and beans and record yields to satisfy demand and increase the carryout. That'll give a lot of volatility in the marketplace as we go into the summer critical yield determining period. Outside markets, watching unemployment, watching Fed action to support the economy, watching global economies. We're watching inflation, which yesterday the Fed chairman dismissed that, and then we're watching energy prices. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.